Most homeowners in California right now have almost 50% in equity.
And recently we have been asked a lot the question about capital gains. So today we're sharing with you the most common misconceptions and what you can do about it.
Capital gains is the tax that is assessed on the sale of an asset, and that is calculated by the sale price less what you have invested into it. I'm Max Garcia, CEO of TaxPro. The easiest way to limit your tax exposure on capital gains is to do the home exclusion, and that is where you live in the residency a sum of 2 years. They don't particularly have to be 2 years straight. They can be a summation of 2 years over the last 5 that you've had the property. And by doing that, the IRS allows you to exclude $250,000 per person. So on a joint return, that's up to $500,000 in capital gains that you do not pay any tax on. So there are a lot of misconceptions on capital gains. The one that I see most often is that people assume that because title gives them a very healthy check, that they're going to pay capital gains on that amount. The reality is that is only the amount of liquidity that they have in the house and has very little to do with IRS taxable capital gains. So another misconception is that a lot of folks forget to include the improvements on their property. So you may have somebody advising you to make improvements on the property to raise the value of a sale. And they forget that's deductible. That's part of the calculation of capital gains. So look at it as an investment, not as an expense. Final misconceptions that I see oftentimes is when individuals are doing wealth planning, they will try to liquidate a lot of their assets and hold cash. Unfortunately, that does get taxed because of the sale of the asset. But if, however, they buy and invest in real estate, there is a small part of the law that's called step up in basis. I can buy a property at a set price, but my family inherited that property at a higher value. And if they sell at that value, then they limit tax exposure because of that. So step up in basis is a great way to buy an asset or real estate today and still be able to benefit the rewards later on. So one of the final things you should think about is whether you buy or sell, run the calculation, push away the fear and run the numbers. That's what's going to speak most to you, and you will come to the realization that whatever decision you make, it is the best decision for you. So I advise, talk to your tax professional or your real estate professional in regards to what is it that you're confronting and how do you get to the real true numbers.
Hi, this is Tatiana Bedoya along with Tony Estigoy, and as you may or may not know by now, we are your luxury property specialists right here in the Sacramento region.
And if you're thinking about selling your home this year, please get a hold of our team by clicking on the link below.